The three small caps in which I'm going to be going over in this video have the potential to go absolutely parabolic in the coming weeks or months, and it's only a matter of time before they break out with a sustainable level of resistance and support to really allow them to fly up the rankings. So in this video we're going to be going over these stocks: EyePoint Pharmaceuticals, OSCR Health and ZETA, and we'll be going over their respective earnings and why exactly these stocks look good as we go through each individual stock. But let's start off with EyePoint Pharmaceuticals. So off the bat here, you can see that EyePoint Pharmaceuticals boast a maximum of a 600% return according to the analysts. And I know what you're thinking, that is outrageous. And to be perfectly honest, it really is. That's what the maximum high side on the analyst expectations is. But if we do actually look at what the other analysts are saying, the average comes in at a 229% return, with the minimum being a 100% return over the next 12 months for a price target. So it's very fair to say that the analysts certainly hold EyePoint Pharmaceuticals to a very high regard. Looking here on the chart analysis, essentially we can see that this stock has broken out of its regression trend. It is in a golden crossover, indicating the 50-day EMA is above the 100-day EMA, and it is closing consistently above the 150-day EMA, which is basically meeting all of my criteria for a potential buy-in. However, I only currently have a very small position in this stock, and I'm basically tracking it for sustainability. If we do actually look at the Bollinger Bands, we can see that this stock actually is starting to look slightly overvalued now. Well, overvalued but overbought, and that's ideally something which we would like to see start to fall down, in which it has it's starting to look a bit more almost sustainable as these last 2 days have closed, and there is a lot of volume being traded within this stock currently. Now, I know what you're thinking. If you are familiar with EyePoint Pharmaceuticals, you'll be thinking this chart doesn't look like this anymore. That is because this has been recorded a few days before, as I am away as of the recording or the upload of this video. So you will have to obviously do your own analysis, but it should be relatively similar. I do expect this to now trade sideways for a few days, and this 20-day SMA to essentially catch back up, and that is where I will essentially be looking at to open up into a larger position as the sustainability on the Bollinger Bands increases. So what do EyePoint Pharmaceuticals actually do? Well, it is a biotech company that specializes in development and commercializing sustained release drug delivery treatments for serious eye diseases. Their focus is primarily on retina related conditions that cause loss in vision, such as and I'm really going to struggle to say these words, but ophthalmology, definitely said that wrong, especially diseases towards the back of the eye. I'm not a medical, I have no experience in this, by the way, so if you are thinking this guy has no idea what he's saying, you'll be completely correct. But the fundamentals here do look really strong, and of course it's an ethical stock, so it will always be quite a nice one to invest in anyway. So these back of the eye diseases are basically 4 key diseases, and I will put them on screen because I'm not going to be able to pronounce half of these words. So what does this company actually do for those of us who are not medical students or haven't got a clue what they really do? So EyePoint develops tiny injectable drug implants that release medication slowly over time in the eye. This reduces how often patients need eye injections, which usually is a very unpleasant and frequent experience. So why does this actually matter? Well, frequent eye injections are a huge burden for elderly and diabetic patients. EyePoint's long-acting delivery solutions could improve patients' outcomes and quality of life by reducing the need for monthly visits and maintaining more consistent drug levels. So again, it's fair to say that it's a really nice stock to actually be investing in. So there is that, which is always a positive, and it also looks as if this could be a huge breakout. Not to mention the fact that the analysts see a potential near, what was it? It was like a 600% upside, 605% upside. So it's kind of a crazy upside when you really do think about it. But this company has been public for quite some time. It has been public since around March 2005, and it is now pretty much near enough an all-time low if we really do go back and take a look. So there is a massive upside according to the analysts, so definitely one to keep an eye on if you are looking for a huge gain. Okay, so next up we're looking at Zeta Global Holdings. Now this company has recently broken out, but it is also falling back down, mostly to the point of it being slightly overbought. Again, the next few days this will most likely trade sideways, but there is potential for this to jump up massively. We can see that it hasn't actually properly broken out of this regression trend, which isn't ideal. It is now, it's fallen back below this level of support, turning it into a resistance at $5, at $15.57. It'll be interesting to see if next week it will climb above that. I would imagine that it will, just because of the momentum. And if we do actually look at the EMAs, we can see, if we hide this because it's very hard to see past, we can see that it isn't actually above any apart from the 50 and maybe the 100-day EMAs. It's closing consistently now below the 150 and 200, which is really not ideal, and it isn't in a golden crossover. So for me, this isn't one that I will be buying into at any point in the near future until I see a golden crossover, which is actually a consistent golden crossover and looks sustainable. We want to see the volume surge with the price, of course, and we want to see the stock closing above the 150-day EMA, just to really indicate that this breakout actually has a lot of sustainability underneath it. If it looks like I'm shining, that is pure sweat. I am sweating my absolute bollocks off right now. In the UK, it's like 30 degrees, which, side note, if you are a UK investor, I mean, that's absolutely, that is brilliant, because a lot of people are going out and spending money. And because the UK is mostly retail based, retail is going to do really well. But let's get straight back to the point of the video here. Who are Zeta and why exactly are they worth a potential buy? Well, Zeta were founded in 2007 by an ex-Apple CEO, John Sculley, a publicly traded marketing technology company listed on the New York Stock Exchange since the 10th of June 2021. Zeta Marketing Platform is an AI-powered, data-driven, omni-channel marketing cloud built on one of the industry's largest identity graphs. It delivers enterprise-grade marketing automation across email, social media, websites even, SMS, connected TV, and videos. Unique strengths of this company are the identity-centric approach. This combining identity, intelligence, and activation in one uniform AI platform. This company focuses on managing the full customer lifecycle from acquisition to retention, which is really unique, of course. And when you combine this with AI, it's almost a recipe for success. So some highlights for this company is their Q1 report. Their revenue was coming in at $264 million US, which is a 36% year-over-year increase. It has an adjusted EBITDA of $46 million with a 53% year-over-year growth with a margin of 17.7%. With a current free cash flow of $28 million US, which was another 87% year-over-year growth. Operating cash flow comes in at $35 million with a 41% year-over-year growth. So this company is obviously growing at rapid rates currently. And for the guidance for next quarter, the Q2 revenue, we can expect this to be a 30 to 31% year-over-year growth as well. So this company looks to be driving in the right way. So why on earth would we choose Zeta over the competitors? Well, they have a robust AI platform with features like AI Agent Studio and agentic workflows that automate campaign processes and intent-based marketing. It has a very high customer retention and expansion, with 90% of revenue being tied to long-tuned clients. This company trades at a reasonable price to sales ratio, around 3 to 3.4x, compared to the peers like Adobe or Salesforce, which are a 12x. Analysts see an upside target range from $27 to $30 plus, signaling a 80 to 100% potential upside for this year's growth. So this company looks to be set for a absolute storm when the market does really catch on to how potentially undervalued this stock is. But right now it's certainly still in a regression trend, and these EMAs are certainly not lining up on the correct side of this price at the moment. But once this does finally switch over and this stock looks to be more sustainable, we could see very similar results as to what we saw in January of 2024. Once we get that golden cross and the close above all of the EMAs, we can see the stock absolutely start to rally up. But for right now, the volatility is certainly priced into this stock. There's a lot of almost wave-like patterns, which is not what you want to see. We're not really properly breaking resistance or regression trends. So for me, it's definitely one to be watching. Okie dokie, so OSCR Health, this is a company in which has properly broken out and actually looks somewhat sustainable at these levels. So I've actually done my own analysis on OSCR Health, and I don't see there to be too much of an upside in my opinion for this year. But when we do actually look at what the analysts think, there is a potential upside of a 37% gain in this stock, but the average is actually coming in at a downwards from here, coming in at -13, which is obviously not ideal. That's not what you want to see, but I do still think there is a lot of institutional backing behind this stock, and the long-term gain within this stock is absolutely huge. People aren't really buying this stock for a swing trade. A lot of people are buying this stock for a long-term hold. I have previously done an analysis video on OSCR Health, so if you would like to watch that, if I remember to tag it, it will be above my head right now. So give that a watch. Probably finish this though, please, first, because I need my retention. It will be really appreciated. So we've seen this stock has just broken out of 2 regression cycles, and if you want proof that the golden crossover really does mean something, here we saw that it crossed over just about here and it jumped up massively. We've just at this point closed above all of the EMAs, and the stock jumps up a huge amount. And to be fair, it also looks to be relatively sustainable at these levels. If we do actually look at the Bollinger Bands here, we can see it was definitely overbought, and now it's starting to look a bit more fair. It's a bit more sustainable, but for me, I'd like this 20-day SMA to really start to catch back up with this price before I would consider buying into a larger position, even though I don't think this stock actually has a potential upside for this year. I think it will start to look a bit overvalued, but it is a long-term gain with this stock. This is the sort of thing you can hold for years and years. This could be the next Hims and Hers, hopefully without the Novo Nordisk beef. So what is the key information in which we need to know about OSCR Health? Well, they currently have a revenue of $3 billion, which is a 42% increase year over year, with a net income of $275 million. They also have an adjusted EBITDA of $329 million, up from 219. They have a medical loss ratio of 75.4%, slightly improved from 74.2, and memberships coming in at 2 million current memberships, which is a 41 to 42% increase year over year. So the shares have recently climbed in the last couple of weeks 50%. This was essentially amid excitement around the proposed Medicare Part E public option. They currently have a forward PE sitting around 35, well above the industry average of around 9.9, reflecting the premium growth expectations, but the price to sales is currently at 0.35, which remains low relative to other stocks such as United Health. At this current price, analysts currently rate this stock an average of a hold, which I do personally agree with, but for a long-term gain, there is a massive upside expected over the next 5 years for this stock. So OSCR Health is experiencing robust growth, improved profitability, and raising its investor confidence. The recent technical breakouts reflect this momentum massively. However, there is still the rich valuation, which demands sustained execution in scaling efficiency and cementing market share. For me, this definitely looks to be a stock in which could be a good momentum trade, especially a long-term momentum trade. I do still expect there to be potential downsides, especially over the next coming weeks, but I think this stock will trade sideways until the 20-day SMA starts to catch up and it starts to look a bit less overbought. So if you are looking for a long-term stock, then OSCR Health could be one of the most sustainable mentioned in this video. So I am sweating my nuts off right now. I haven't got a really good skincare routine. If that's what you're thinking, it's just pure salty sweat. So I'm going to end this video here. I'm going to have a shower because, oh my gosh, it is hot in the UK. So I hope you have enjoyed this video. Join my analysis empire. Hit a subscribe, hit a like. It'd be great to see you around here. With that being said, none of this, of course, has been financial advice. This is just my own personal opinion. These are just stocks in which I am watching these technical levels on to really spot a potential momentous buy point and a sustainable one at that. So if you have enjoyed, please do join the analysis empire, and I will see you for the next video.